everybody. Happy Friday. How you doing out there? Did you have a good week? Hope you had a good week. It was another exciting week, of course, and we will cover that today. This is our Closing Beat show. We'd call it the Closing Beat to reference our name, Jazz Wealth Managers. We are financial advisors, and I hope you'll keep us in mind as far as opening or transferring accounts to us if you decide to. IRAs, Roth IRAs, things like that. We manage long-term retirement investments, and we use our own portfolios. You can actually see them on our website. They rank from aggressive to conservative, and we kind of use those to cater to whatever your specific goals are. And then we also like to use them to be able to update our customers. In fact, last night we did a class. Every week we do a class, but once a month the topic of that class is actually on the portfolios and how they did and kind of things like that, as well as some of the geeky stuff we covered last night, presidential market performance, as well as the Fed rate cuts, emergency performance. So we shared some of the studies that we have along there with you. We're also playing a game. It's called Guess the Dow. Every Friday we announce our winner, and we do have a winner today. Our winner is Saniha Daganahali. That's, I believe, how you say it. Sorry if I mispronounced that. The guess, 25750.5, was the closest without going over. They are not a customer, so we've already emailed them to get their address so we can send a $100 gift card out to them. If you want to play, go to jazzwealth.com/guess the Dow, and you can play. One of our customers, B, you were 4 points off, 4 points away from winning there. You were so close. But B, fortunately, was not our winner anyway. So if you're one of our customers, you can also go into the dojo and see our class from last night. Our Jazz Artist of the Week will wrap up this week. We've been talking about Dave Weckl. He's an amazing drummer, probably the best drummer out there. He's got a song, it's called In the Pocket from 1994. It's a little fusion jazz kind of thing. Sounds a little dated maybe if you listen to it now. It's got that sort of synthesizer keyboard thing going in there, saxophone and everything, but really good song. And of course, if you're into drums, well, you're going to like what you hear there. So that's what you have. Let's go over the stock market. Down 256 on the Dow, which doesn't sound so bad. Down 51 on the S&P and 162 on the old NASDAQ there. We'll take a look here. You've got the Dow outperforming the S&P 500 today. Let's start with the Dow. We talked about the resistance area just up and above here, the sort of known ceiling for the markets there. We did sell off from there. However, notice we closed well off the lows. So if I zoom in here a little bit, you can see we did close well off the lows, and a lot of that, well, all of it came at the end of the day. We kind of flirted with a couple rallies throughout the day, but ultimately the big rally came towards the end of the day there in the Dow, S&P, the NASDAQ as well. The Russell was by far the underperformer today. If you take a look at the S&P 500, you can see closing well off the lows. It was a bit of a bloodbath out there. I believe about 800 points lower on the Dow for the day. You had a 70-point rally just in the S&P 500 towards the end of the day there, and that's all good. You got jobs numbers that came out today, much better than expected. They sort of got floated away in the headlines there because everybody's focused on the virus, of course. And like I said, you had a couple rally attempts throughout the day. Maybe we can show it there. A couple rally attempts throughout the day here today, but nothing really took hold until later in the day. Here's that last hour of the day. You can see the rally going into the end of the close there on the S&P 500. You had Peter Coy of Bloomberg. He writes articles for Bloomberg there. He said, you know what, we may already be in a recession. Right? It could just be that we're already in a recession. He kind of cited the 2008, well, before that whole mess. He cited that and said when we look at that, the Fed was actually projecting decent growth going forward, but historians will mark the recession to start as of December before. And so his assumption was, hey, recessions start when things are good. We just don't go back and mark them until, we go back in time and kind of justify where the recession started there. So anyways, that one kind of grabbed some headlines today as well. You got the Dow lower 8 out of the last 10 days, and if you are someone who enjoys seeing a different type of chart, let's take a look over there. Here's the Dow's wild ride over the last 10 days there. 8 of the last 10 days lower. We set an all-time record one-day gain, and then shortly after set an all-time second record gain there in terms of the biggest point gains on the Dow. All in all, we're still down. It's the bottom line. We're still down. But today kind of reminisced a little bit of last Friday, if you happen to see what happened there. We did close up off the lows overall. It was still a down day, but it wasn't as bad as what we had seen throughout the week. And that was pretty much the same thing that we saw today. The S&P 500 has officially had a trading range of 1% or more in the last 12 days now. So pretty interesting there. If you like the volatility in the markets, you're getting it. It's certainly something you're enjoying there. Well, we'll go over a few things here, and then I've got some maybe some Friday takeaways for you that we'll go through. But in the Dow, your stronger stocks, Walgreens, Boots Alliance there, 3.5% to the upside. That was one of them there, and I believe 3M also closed positive. Yep, 1.4% on the day. Those stand out as your stronger areas in there. In the Dow, you're going to be looking at JP Morgan, lost 5%. Financials were really, really weak today. Microsoft was also down on the day, but did close up off of its lows. So we'll just go on and focus on ExxonMobil, which was weaker. We can strike Microsoft off the list there. ExxonMobil lost 5% on the day. That's all going to be because of the price of oil. We'll talk about that in a second. Speaking of oil, in the S&P 500, your strongest stock was Cabot Oil, up 10% on the day. I don't know why, actually. I'm not sure what the reasoning behind that was. Gilead Sciences hit new 52-week highs, 5.37% to the upside. And Alaska Air, believe it or not, an airline stock was one of your better performers in the S&P. They did actually downgrade themselves or lower their guidance going forward, but the stock still got one of those kind of oversold bounces there, about 4%. In fact, airlines did really attempt a decent little bounce today, if you're paying attention over there. On the downside, it's going to all be oil related. Oh, horrible day for oil. I'll cover it in a second. Apache, double digits to the downside, 15% to be exact. Double digits on National Oil Well, NOV is the ticker symbol there. HP, double digits to the downside. And then Occidental Petroleum, I know I just pointed out because some of you are looking at this one here. Occidental Petroleum, 15% to the downside as well. We'll talk about that in our sector breakdown, which we could do right now. Actually, all sectors in the S&P 500 were down on the day, despite a little bit of a rally there towards the end of the day. Oil is going to be the focus. That's going to be your headline. Lost 10% on the day, making new lows, of course. In the meantime there, Russia did not accept Saudi Arabia's proposal. Remember yesterday I gave you the proposal that Saudi Arabia and OPEC put out to say we're projecting or we're proposing 1.5 million barrel cut across OPEC and Russia. They call it OPEC plus. Well, Russia came out today and said, no, we don't like that. We can't agree. And they said this was probably the worst meeting they've had ever. That was Russia's comments there. And they said, tell you what, as of April 1st, the world is free to pump oil as free as they want. So really negative comments there in terms of oil. And so that really hurt a lot of the oil areas today. XOP, one of the ETFs there, down almost 10% on the day. Oil service stocks, OIH is one you can look at there, down 11% on the day. Names that are already losing money or that have a significant amount of debt, those are the ones that took it the hardest. If you look at like Devon Energy, these guys lose money. They don't make any money as it stands. Lower oil is certainly going to hurt that possibility for them. So lost 16% on the day. Not very good there. If you look at Diamondback, ticker symbol FANG, lost 16% on the day as well. They've got a lot of debt. Apache, they're losing money, so they're one of the ones that got hit there as well. And Occidental Petroleum, I mean, just we already talked about it, kind of beaten down there. In the transport sector, not bad. This was actually the better performing area of the market today. Transport's only down 0.71%. They sold off the least. You saw a little toe dipping in the airline space. Alaska Airlines already pointed out. JetBlue sticks out as well, basically flat on the day, and United Airlines 1% gain on the day. So people deciding, you know what, these airlines are maybe a little bit oversold in the short term. Got a little bounce there. Regional banks, they were horrible today. Regional banks down 4.3%. That's all going to be low rates. Rates hit new lows today. You got 3% down on the big financial stocks as well. It was basically a broad sell-off, but if you look deeper into that, you got JP Morgan, one of the weaker ones, down 5%. Also, the CEO had emergency heart surgery and everything. He's okay, and I'm told he's already back to working and on the phone and everything. He's a fighter. I really like that guy. Jamie Dimon's his name if you want to look him up. But anyways, hope all goes well with him. The 10-year hitting new lows, or I should say the yield hitting new lows, prices hitting new highs. The 10-year hits 0.676% as its low. People are literally volunteering to pay money, not to lose money. Sounds kind of weird to say that, but that's where we're at right now in this market here. And the Fed futures market has priced in a 53% chance, I believe, of a 3 rate cut in March or before, meaning 75 basis points or more. So if they did that, that pretty much gets us back to zero. I mean, we're not looking too good there. That leaves about 2 cuts or so until we could get back to 0 rates on overall. Well, we'll see what happens. You got communication services hitting new lows as well. So think about that. The markets came down and sort of tested the last Friday's low. Communication services broke through them, right? Although they did rally into the close there, you got weakness, right? Facebook down 2% on the day, Alphabet down 1.45% on the day, and Netflix in the communication services down 1% on the day. Those three, and their different share classes, make up about 45% of the XLC. So with those three names being weak on the day, you can kind of understand. Gold hitting new highs today was up. Well, if you look at gold this week so far, up 6.8% just on the week. So an impressive move for the price of gold if you happen to be playing along. And we shared last night in our closing beat, if you had to buy gold and you could only pick one day to buy gold, what is the best day to buy gold? We studied 30 years of data to show what's the best day. If you're a freak out there and you're like, meaning like you're panicking and you don't like this market, or you're a gold bug and you just like buying some gold, what's the best day? Our customers now know that. I'm going to tease you guys with that one a little bit. Let's go over to some stocks. So we got Costco today, 1.4% on the day. Costco reported earnings. They beat by 4 cents. Revenues came in stronger than expected. They also reported a 12.1% increase in store sales in February. Virus, people stocking up and everything there. You got Big Lots today, added 7%. So Big Lots, they've got two activist investment firms going after them right now. They have over a 10% stake in the company, and they're basically saying share price and store performance, sales in general, have been suffering, and because of that, they've taken a position. They want change in management, change in the board and everything. So that stock got a 7% bump on the news there. Chipotle, there you go, was still down on the day, but William Blair and Associates, that's an analyst firm there, they said they like the price here, $7.23-ish, and they said the reason why we like the price here is because there's been no discernible change in store traffic. People are still going to Chipotle, they're ordering online, they're using the Chipotle lanes out there that we talked about yesterday, and so they're bullish on Chipotle. That's their words, not mine. Starbucks working on opening up their stores over there in China. They're getting back to normal. They said that their store sales in China should still be down 50% for the second quarter. They see February store sales down 78%, although I believe almost all of their stores are now back to being open there. AMD was in the news today, added 1% on the day, said that the impact of this version of the coronavirus likely to be very modest on their first quarter results. So analysts appear to have gotten that one correct in general. H&R Block, new 52-week lows, solid downside move there. It still finished down 5% on the day. They missed by 3 cents. Revenues came in as expected. Higher expenses. That's it. Tax season, all is good. They're doing well. However, they've got higher expenses, and they got punished for it here today. And that's what you have as far as the stocks go. In terms of the S&P 500, 10%, right smack on the dot. 10% of the S&P is above the 50-day moving average. That'd be 50 stocks, 500 stocks, if you don't include the different classes of stocks in there. And so that's where we stand. There were 2 new highs today. It's all going to be Newmont Mining. Newmont Mining is that gold miner we've been talking about, up another 0.5% today. And the other one was Gilead, right? Yep, Gilead Sciences up 5%. They're real heavy in the virus news right now with their one of their medications they're working on there. You had 144 new lows. That's a high for the week, by the way. Oil and gas are going to be the big ones there. Diamond Offshore, 21% to the downside. Helmerich Payne to the downside. We covered National Oil Well to the downside, and like Occidental Petroleum, all of that. You get the idea. Oil stocks just hammered today. Some of the better performers, Dollar Tree, although it hit new 52-week lows, added 3% on the day. So looking good there for Dollar Tree. And then airlines. So we'll go through airlines. They did hit new 52-week lows. Some of them finished positive on the day. Some of them, like Delta, there you go, positive on the day, 2%. And United Airlines, of course, positive on the day as well by 1%. And that's what you have there. Okay, let's talk about this here for a second. What do we want to start with? Let's start with some stats here. You got some people, rightfully so, kind of panicking about this downturn here in the market. But is it odd? Right? The fact that how we've fallen, the only thing odd about it is really that we have done it quickly, right? Other than that, the pullback in the market is, believe it or not, completely normal there. So since 1928, the median drop for the S&P 500 from whatever the high year-to-date was. So we took every single year since 1928 and we said, where's the year-to-date high? What was the biggest drop from that high every single year? The median drop is minus 13.2%. We're down 12.8% as of now. So one could argue that this is actually not that odd of a drop. It has yet to become something to be concerned of, but it gets a little bit magnified, right? Because in the last 8 years, we've only had one other drop bigger than what we've had right now. Do you know when that was? October, November, December of 2018. So because for the last 8 years, we've been lulled into this sleepy kind of calm 6 or 7% pullback, not a big deal type market, when we have something that is a 10, 11, 12% drop, it seems like it's a bigger deal than everything else. And in reality, the market's not really moving and panicking because of the virus. The market is actually adjusting to what the actual impact of the virus is going to be. So the markets only respond to the fundamental performance of a stock projected into the future. And so right now, all of this repricing that you're seeing is what's the true effect? Naturally, travel is going to have an effect in the tourism industry, in the casino industry and stuff, all going to take a hit. And so this movement in the market is everybody out there is trying to price what is the current fair value looking into the future, right? And so that's what we have going on in the market there. Just want to share that with you because I thought that was an interesting stat that this drop is actually pretty much right on par with what is normal for the S&P 500. All right, as far as the virus is concerned, today we saw for the first time since mid-February, new cases overall has risen. We're now over 100,000 cases there. The good news is the number of deaths related to new and existing cases, it stays the same. It's still at 3.4% globally, so that's pretty much it. And people are just trying to reprice what they think stocks are worth given what they expect to happen. And we got a little guidance from companies today. We got a little more guidance anyways from companies saying this is about what we think it's going to hurt us. This is how much it's going to maybe factor into our next quarter earnings and things like that. But that's what you have right now. Anyways, other news there. The U.S. apparently the White House is considering ways to discourage cruise line travel. The cruise line companies would beg to differ. I'm getting all kinds of interesting, hey, Floridian, come on over and take a quick cruise over to the Bahamas. We'll just go to our own private island. We won't go to any other countries or anything. We'll just go right over there for a couple days. Bring a guest. The drinks are on us. Getting all kinds of cool deals like that. Anyways, that's that. Let's move on here. What do we have? So Monday, we've got earnings from Sohu, Chinese company. Casey's General Stores and Stitch Fix will report after the close. That will probably be the main focus stock there. Dividends, you got ex-dividend day for CME Group, 85 cents. Travelers Insurance, 82 cents. Occidental Petroleum, 79 cents. Nordstrom's, 37 cents. And Expedia, 34 cents. And that's what we have. That's your update for the day. I'll take my shot here, see if I can answer some of your questions, and we will go from there. Whoa. The virus is a political tool. Yeah, I'm sure it will be used in that respect. I'm surprised that hasn't come out too much just yet. Yeah. We'll see what happens there. You doing a little buy-in today? I see you. I love it, man. Cool. Well, I will wrap it up there. Apparently, we're done for the day here. I would say expect more action on Monday. There's going to be more volatility to be expected out there. We'll see what happens, and of course, be ready for it. I wish you guys a good weekend in the meantime, and thanks for watching. We'll be back then.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.